So there's going to be a lot of fundamental data this week. Are the markets positioned structurally to give us an advantage? I think so. Let's roll the intro. Let's break down these markets. We'll talk about it. Guys, what's going on? Welcome back, guys, to another Sunday market breakdown. Hope you guys are having a solid weekend. Sunday, okay? So let's pull over and let's see what these markets are looking like. We've already executed 2 weeks of February and have some interesting facts about these February markets, so I want to go over that. And also, again, we have some pretty big data coming out this week. I'm going to be talking about that tomorrow in the high impact video. Okay, that's where I talk about all the fundamental data releases. You guys want to be there. Okay, so we're coming out with CPI for the GBP, and we also have a USD CPI as well next week. All right, that's a pretty big deal. All right, and so also, folks, this stuff happens pretty quick, so you guys want to make sure you're subscribed. Okay, so you can get alerted when the video comes out of me talking about the different subject matters that are pertaining to the week. And of course, if you like the content, like the video for your boy. I appreciate it. Okay, so guys, look, interesting fact about February. We mentioned probably about 2 or 3 Sunday market breakdowns ago that, hey, January, massive bull run. Okay, so the last week of January, I was mentioning kind of how what we would see in February, right? I like to sometimes forecast and, I don't want to say predict, but, hypothesize where we think markets will be, again, just based on the current structures and, based on some of the different fundamental data releases that are going to be coming out that month. And we were pretty accurate in our assumption where we thought we would see February actually give back some strength for that US dollar. Okay, here's the dollar index. If you guys check out and see where that dollar index is right now, it is holding the highs, okay, of February. We have not pulled back down into that structure, and we've had a pretty expansive move up into a previous consolidation that we see here on the dollar index, right? So we were thinking that this week we might see a pullback there, which means we'll see some strength on that Euro-U, potentially some strength over there on the Aussie as well. And US CAD, I didn't mention this, we just got off a webinar, but I didn't mention the US CAD also is positioned pretty well. Look at this massive leg here on the US CAD, okay? Maybe we can see some pullbacks there as well. So you have the Euro USD, you have the Aussie, and you have the CAD. Maybe we'll see some US weakness translate on those pairs there. The GBP isn't positioned so well for us to execute long GBP USD just because there was a lot of volatility and the price structures there aren't really what we're looking for. All right, so again, we've given back a decent amount of our gains in February. You guys know what February has looked like for the S&P 500, right? I mean, here's a screenshot there. Again, massive sell side, most volatility we've ever seen on a single day move there on the S&P. That was the 5th of February. Massive sell side hit off and destroyed all of the year-to-date gains for 2018. Very interesting stuff. I do think that we're going to see an uptick in CPI, right? So we're getting a CPI coming out on coming out on Wednesday. I think that might give us a little bit of volatility, but that's not, again, coming out till Wednesday, Tuesday, and Monday. There's not too much data coming out pertaining to the US dollar. So I think, again, we'll see a little bit of weakness coming in on that end. So I'm going to go over that in terms of what to look for here in the charts. And I also have some minor pairs that are pretty interesting. I want you guys to check out the Euro AUD. Look at this structure, okay? Seems a little overextended, all right? And with some Aussie news coming out, we have an RBA speaker coming in on Thursday, and we also do have some unemployment claims for Australia coming in on Wednesday. Any sign at all of Aussie strength is going to have that structure there liquidate all the way back down into the consolidation. So Euro AUD is something that looks pretty nice. And speaking about the AUD, check out the GBP AUD, okay? GBP AUD, if you guys look, massive sell side, that's our Brexit. We have Article 50 in there as well. AUD has actually stayed consolidated at those lows. A break higher is going to send us back inside of that Brexit candle. All right, and that's something that we saw happen on the US GBP USD. We've yet to see that happen on that GBP AUD, and any kind of AUD weakness based off of the data that's coming out this week is actually going to send that market higher back up into structure. We may have some opportunity there. Okay, so we have our AUD weakness play over there on the GBP AUD. You have an AUD strength play that I think is much better than the AUD weakness play. That's just somewhat of a a contingency plan. I think the Euro AUD play sell side looks really good for, again, some AUD strength based off of the Thursday conference and the Wednesday data coming out at 9 o'clock. Okay, so that's what I'm looking for. If we can see some Euro AUD back down in the structure, and let's keep an eye on that GBP AUD. All right, so again, Market structure looks pretty decent. I'm all the way in on it. I want to shoot over into the charts. I want to know what you guys are looking at though. Okay, give me the plays that you think markets are going to align, or the fundamental data is going to give you an opportunity to get an awesome position in. I would love to know about it. Let me know down below in the comment section. I'll give you my thoughts on it as well. And high impact coming out tomorrow, so make sure you're subbed, because that high impact is going to be really important. We're going to be breaking down the CPI of the US. We're going to be breaking down the CPI of the GBP. Inflation is a big subject at the moment. Okay, let's pull over to these charts. Let's see what we get. We are also long right now in the Euro USD play. I forgot to mention that. Jesus called that out earlier today. Okay, so let's see what we get. These markets, they look pretty good. Okay, make sure you guys are subbed, like the video for your boy. Let's pull over into the charts and see what we got.
All right, guys, one thing I didn't mention was NZD USD short. I'll attack that once we get there, but here's that Euro USD. Okay, nice and simple, folks. Let's pull over to the monthly, just in case you're new. I like to establish that monthly time frame and kind of see where we are structurally from the high to the low here. This is what we've been playing literally since 2016, folks. Go back to 2016. We've been looking around this same swing here for quite some time. So low to high, boom, here we go. So we saw markets run higher, boom. So that's 2017, right around French elections, and Draghi mentioning he was going to slow stimulus. Boom, we get back up into that structural high. Draghi mentions again that he'll slow stimulus, and we get some U.S. weakness in terms of a bad, we get a bad average hourly earnings, and we had a really bad CPI and NFP. Okay, so that broke us higher here, broke us outside of the structure, and then we just saw a massive liquidation of the dollar in January. Okay, massive in January. So here we run back up into structure, and then notice now we've seen markets kind of hold these highs here for this Euro USD. Okay, it's pretty interesting. So we did see markets pull back down in February for the first 2 weeks, and that's really what we were expecting. And now it's just all about where do we think this market can go. Now here are the here are major structures that we've been keeping an eye on. Seeing markets run back down into this 38.2, that's been something that's pretty interesting. You got three things going on here. Again, it's a 38.2, which is again the larger fib here. You have a structural formation in the area. And also, if you draw a fib from the low to the high here, you're also getting a 61.8. Okay, boom, there you go. So again, yes, we could potentially see markets pull right back down into that structure. But what I've been keeping an eye on, if you go deeper into this time frame, into the structure here, let's go to the daily, just so we can establish that daily, so you guys can keep an eye on it. So here we are on the daily. Okay, again, you're getting a massive run here, and you rarely really see too much of a pullback in this move. So again, a pullback from here, basically the 2280s down back into the $20s is, again, it's not, I'm not going to say irregular, but it doesn't happen often. You don't really get these massive 280 pip pullbacks. When's the last time we can see it? Okay, I mean, we'd have to go, here's February of last year. You guys really don't see a very dramatic pullback. So a pullback from these highs down into this structural low, which would be a 500, close to a 500 pip pullback from the 25s down to the $20s. We haven't seen it yet. We didn't see a move from 20 to 15. Okay, we saw a move from 20 to 16, so 400 pip pullback. Okay, and it took some time for it to happen. We actually really only saw a move down into the $17s. You saw a little bit of consolidation, and then you have one more 100 pip leg down, and then we ran from the 16s straight to the 25s, a 900 pip up move. So yeah, outside of that entire up move, definitely you could see a little bit of a liquidation long term, but we wanted to see up until that Wednesday CPI on the 4 hour. If you got here on the daily, if you guys notice, we have established that on the daily. We're here at structure. Okay, we're here at structure. So in that 4 hour, we were assuming that we could get a quick push back up into this level here. Okay, which is really around the 23 highs. If we saw a push back up into the 23 highs, then we would probably be able to, make some money on that move. Okay, here, I'm trying to draw this up in terms of the, here we go. All right, so let's see markets run back up into this structure. If we can get markets run back up into that structure, not so bad. Okay, now look, if that doesn't happen by Monday night, if that doesn't happen by Tuesday night, of course, it's going to be a little risky. It's going to be a little risky. This U.S. dollar still has a pretty decent amount of downside, and I think that this could be one of the first true corrections, okay, back down into this consolidation. All right, so I think it'd be a little risky to hold it over Wednesday, but we'll just have to see how structural forms over the next 48 hours. Fair enough. We're looking for a break higher here at the 2280s. A break higher there will lead us back up into the structure. Pretty simple. Aussie dollar, same thing, right? I mean, if we're looking for strength over there, you know, to the upside there, then we probably want to correlate that over here as well. But here's the interesting thing about the Aussie. As you guys notice, if I pull back over to this Euro, how much of our 2018 gains have we eroded on this Euro U? Okay, how much of it? Let me clear this chart real quick just to kind of show you guys. Here we go. All right, so here's, again, we're cleared. Let's check this out. Let's go to our fib. Here's the low of 2018. Okay, and here's the high. So we've pulled back to 50%. All right, whoops. We've pulled back 50% of our gains here for our 2018 run. All right, boom, boom. Now, for the Aussie, what's that same number? Now, let's pull up this Aussie. Let's go to the weekly and establish where we're looking on that weekly. Let me pull off the fib, and then we'll talk about the entire structure. But from the fib low to high 2018, as you guys can notice, here's our open in 2018. We're back. Okay, we're back to square one. All right, so just a massive run higher, and then you just saw it literally just 2 weeks of price action. You saw markets totally turn around. Okay, now we're just trying to establish really, okay, this entire swing in general. Okay, and so from the low here to the high of this swing, we're sitting right there at, again, a 50% retracement when you're encompassing the December run. Okay, so if we pull back and look at this bad boy on the monthly, what you guys will notice is, again, we're seeing markets somewhat stair-stepping higher here, right? You can see somewhat of a trend line forming, as we can see. Boom. Okay, and so, yeah, technically we do have some potential for some more downside. If we're still, you know, again, if we're encompassing, you know, the December run, if we're looking at the trend line here, you know, just making this stuff really simple. Let's just see where we are in terms of structure there. So if you're encompassing the trend line, this wedge that where markets broke out, we could see markets pull back down onto this consolidation. Okay, and then you might see markets start to say, okay, hey, I've gathered enough footing, I would like to run. Okay, but until then, hey, we're really just kind of floating, and that's really what I don't like. Okay, so if I was to play this US dollar weakness up until Wednesday, I probably wouldn't be over here on the Aussie. Now, is there consolidation on the daily on that Aussie for the past 48 hours? There is. Okay, there is. We have seen markets pull back down into structure and sit, but I really wouldn't coin it as consolidation. We kind of have markets just kind of floating in this structure. I don't like that so much. If we relay it back over to the Euro, it's a little different. If I show you guys the daily on this Euro U, we actually have some structure in the area to the left where markets really truly can turn around. Okay, we don't really have that here. So we don't really have, you know, a price to relay back over to if this market is expensive or cheap. For us to do that, we'd have to pull out a bit, and then once you have to pull out so much, you lose accuracy. Okay, the higher the time frame you have to go, you lose a little bit of accuracy. The further back you have to look, you lose a little bit of accuracy. Why is that the case? Remember, folks, this shit has recency bias, okay? Your markets are going to really be obeying the current price structures, which is why when we see a break of the consolidated high here, what do we run? We run right back to the next level. Now, is this a major level? I wouldn't coin it as a major level, but we were tied up for an entire week throughout, you know, so in context, we were tied up throughout an entire week in 2018, and we're only entering into our 6th week. So, yeah, you have a lot of folks paying attention to that level. So can we see markets push back up into structure for the Euro? Sure. I don't think that's an irrational position, especially if we play it right, don't have too much risk on, right around the break, start potentially sizing in, and that's what we're doing. Now, here on the Aussie, it's a little bit more rational for sure. We don't have too much of a footing. Markets could kind of dip down a little bit lower. There's a lot of downside here that is very logical for markets to run down into. So I'm keeping an eye on the Aussie, but I'm not actively playing that Aussie sell side at the moment. All right, I have better opportunity elsewhere. Okay, when it comes to that structural formation. Now, here's that GBP USD. Same thing with the GBP USD. Wasn't really playing the GBP USD too much. Here's our 2018 look. Again, massive amount of sell side. What's amazing about this GBP, folks, is that run that we saw when that GBP, they were mentioning things about the interest rate, man. A massive, massive spike to the upside. I can go down to the 5-minute, and you guys will literally see, here you go. You guys will literally see, what's this move? Okay, this is a 220 pip move, okay, over the span of just 25 minutes. So, folks, when I talk, I mean, we're coming out with a video this week about volatility that I really want you guys to watch. Volatility can destroy you, okay, because these random runs, if you're on the wrong side of that and you aren't managing your position or your portfolio well, of course you could blow up. It makes total sense. You know, even this move here, 140 points. Okay, if you're doing $2 a point, $3 a point, $4 a point, let alone, $10. I mean, goodness. I mean, you're literally seeing 200, 300, 400, 500, 600 $600 swings in your portfolio. And I'm not sure how large your portfolios are, but those are pretty massive moves for, the new retail guy coming in on one position, okay, on one trade. All right, now I'm not saying that's a mass move over the span of, a multitude of positions, but on one position, hell yeah, dude, that's a little bit too much. So you got to be careful, folks. Don't over leverage those portfolios. So here we have another 200 pip run sell side. Again, just a massive amount of volatility. I'm leaving this thing alone for now. Okay, that's why I didn't mention too much about the GBP. Okay, I'm leaving it alone. Now, one thing I do want you guys to rationalize on this pound real quick, because I'm going to go look over at that GBP AUD, is here's our Brexit candle, and here's that US dollar. Okay, and here's that GBP USD. We're back inside of that Brexit candle. So you have seen the GBP recover from the losses, from a decent amount from the losses that we saw over in the UK. Okay, but remember, 2018 is going to be massive for Brexit negotiations. So we're really going to want to rationalize exactly how this is going to play out. Okay, now if we're looking at the trend line from left to right here, boom, you got something there. You really do. Okay, so we can keep an eye on that. Let's keep this on for the next few weeks and see if we get any kind of test back down into this level and see if it interacts at all. All right, so want to relay this back over to the GBP AUD. Okay, bear with me, folks. And then we'll go look at that Euro AUD, which looks real nice. Here's the GBP AUD. GBP AUD right now, again, we have not recovered from the Brexit situation, because AUD did have a little bit of strength. All right, AUD, Aussie, did have a little bit of strength this year. Okay, and a little bit closing out last year as well. So here's our Brexit. Okay, this is a weekly. Here's our Brexit. Here's Article 50. We've been consolidating inside of the Article 50 high for an entire year and 2-3 months. Okay, really a year and 9 months, man. This year's last year flew by, of course, but I mean we're already in middle of February, so. Absolutely, folks. This is somewhat of a critical structure, a critical high that maybe you would call it for the GBP/AUD. If we get a run back up into the level, it'd be pretty interesting to see. And I think that we could definitely, put some size on the move. Again, if it's blatant, I'm basically saying there's a blatant, gain inside of in terms of pound strength. I would love to play it here on the pound. If this AUD gives back anything, okay, if it gives back anything, again, this would be a really good place to play it because it's pretty much life or death at the moment. Now, I don't think have I showed you guys the dollar index. Here's that dollar index real quick, because I mentioned the dollar index in the briefing. I want to show you guys where we are on that dollar index real quick, just to have you guys, again, rationalize that structure that I was talking about. Here's the daily. Okay, so the daily structure, again, you're going to see it somewhat correlate pretty well to that euro structure. But notice, here's that run from February. Okay, that February run, we've held the highs on that run pretty well. Okay, now all we're looking for is potentially a nice little pull back down into the move, and then we could expect a move higher. That's all I'm saying. I'm not saying that the US dollar is done gaining strength. I definitely think that we could give back a little bit of this sell side that we've seen since 2018. Okay. So because when you relate this US dollar sell-off to where it kind of started from the high to the low, I mean, we're sitting right here at what, a 50? Yeah. So we're seeing, we have seen a 50% move, just like we saw over there on the euro. But as of right now, I think we could even see a little bit more pull back up into structure based off of the December run as well, because December was not pretty. Okay, December was not pretty. We came in at 94. We closed December at 91. Okay, November we were at 95, the 95 flats. We ran all the way down to the 88s. All right, so again, a pretty massive run. Maybe we could see a little bit of a pullback. Markets seem like they are a little bit under pressure at the moment. So maybe that's why we'll see a little run back down into structure, and then we could potentially see a correction back up into this general range here. Okay, that's what I'm looking for. So Euro AUD is a pretty simple play for us as well. All right, so let's draw this up. So let me pull this off. Have you guys take a look here at this Euro AUD. It's pretty simple. We're at the high. Are we going to fail the high? If we fail the high, I love seeing the consolidation at the high. Let's see the run back down. Let's see the run back down. It's a pretty simple move. Would love to see the run back down. We could easily run back down into the 154 flats, which is a pretty massive run. That's over a 280 pip run. Do I need that to hit my risk reward ratio? Absolutely not. I mean, if we can run back down into the 55 mids, we'll be at a 1-to-1. If we get any kind of awesome structural formation up here in this area, where we can get an early entry, then we will be able to do even better. Okay, if you guys have a hard time understanding what I'm saying, make sure you get inside of the rookie course. Okay, the rookie course is in the description below. It'll somewhat give you guys an idea of what I mentioned about risk reward and how to manage positions. Okay, so again, here's probably where we'd be in trouble, right? In terms of markets going higher than that structure. So if we see markets break lower, then where are our stops going to go? Our stops will go probably where a full reversal is taking place, right? And that would probably be around this price area. So here's basically our structure in terms of our stop to entry spread. All right, 80 pips. All right, our target is 260. Not bad, folks. Not bad. All right, that's nearing a 3-to-1. Okay, so pretty interesting stuff to note. That's pretty much it, folks. It's really simple this week. I tried to, simplify it as much as possible. Lately, we've been talking a lot about, different currency indexes, right? So we have the dollar index. Okay, we understand what the dollar index is. It's the dollar versus, depending on which index you're looking at, it's either 6 different pairs. So that would be the euro, the Aussie, the GBP, the Canadian dollar, the Swiss franc, or the Japanese yen, or 16 other pairs. They would include other things like the Chinese currency, different currencies in South America, smaller currencies that still have some type of buying power, but those are usually less than 1% of the total trading volume. Nevertheless, we've been looking at other currency indexes. We've been looking at the Euro index, the Aussie index, the Pound index, again, just to see how the pound is performing relative to those other 6 or 7 major currencies. It's a really good tool for you guys to take a look at. You can go over to TradingView, and they are there, okay? You can also type in currency shares and then type in pound in Google, and it'll come up, okay? So guys, look, your profit, always my motive. I'm really looking forward to this week. I think, making it simple is probably going to help us out a bit. This Euro USD is pushing. We were looking at this Euro USD long at, I think Jesus called that out at 22.80. 22.80, Jesus called that out at right around this break here. Okay, so again, we would love to see markets sustain. Let's see what we get, folks. Okay, high impact tomorrow. Make sure you guys are there. Like and subscribe. I'll talk to you folks real soon. Peace.